Hey everyone, welcome back to Yuri's Box. In this video, I'm going to talk about the S&P 500 versus European stocks. Is it time to rotate? If you like this kind of content, consider leaving a like. And as usual, nothing I say in this video is financial advice. Isn't that really the best part of the video? Saying not financial advice. In any case, one thing that has been working rather well is this kind of rotation into out of your US stocks and assets towards the rest of the world, really, and in particular for the past few weeks, really ever since the German announcement of breaking the debt break in the constitution. European stocks in general have kind of had a golden period. Okay, a golden. They've been on the uptrend. That's what I'm that's what I'm trying to say. And what I read is a lot of is it time? Oh, the question that's being asked, is it time to really reconsider Europe? Is it time to maybe consider the end of American exceptionalism and perhaps rethink how we treat European stocks? And again, I will keep this video short because my ideas are quite clear on the matter. And for me, the simple answer is no. Now, in the short term, just by looking at the DAX for this is the German index. This is a trade that's been working and that will probably continue to work for number of weeks, months, or however long it lasts. So I definitely wouldn't try and short it. I mean, shorting something because it went up is a recipe for disaster in my opinion. But in any case, for the short term, it might work. But say, let's look at the S&P 500, okay? And I've made my thoughts known, what I think that where we're headed with the S&P 500 if um, the matters that we have at hand, so tariffs, layoffs, and the yen carry trade issue continue to persist. Well, you're going to have risk off, and so stocks aren't going to have a great time. Um, and in general, if you were to ask me, would you rather put your money to work in the S&P 500 right now with the risk of a further decline, or European stocks? My answer would always be the S&P 500. And the reason why is something I read on X. Uh, I think it was Market Radar. I have to check the Twitter handle. But anyway, there are a couple of guys that write on X, and they have a YouTube channel as well. Um, and they basically the idea is Europe and the United States are two very different kind of markets. Okay, the US is great at maximizing productivity. Europe is great at maximizing the quality of life. Therefore, you have all these rules about everything. The only thing that Europe has for going for itself really is the regulatory environment. That's it. That's where you have the motto. The U.S. innovates, China replicates, and the U.S. and the EU regulates. And because of that simple principle, really, the I mean, European stocks aren't compelling to me for the simple reason that yeah, they might work for the meantime, but for the long term, the place you want to be is the US because no matter how bad things can get in the meantime, structurally the US has uh, bigger tailwinds than the EU. Okay, and again, I've spoken about the DAX in one of my previous videos, and it is really just to go on a tangent here. A great example of how the stock market isn't the economy. And just because economic data is looking a bit sour doesn't necessarily mean that stocks will immediately answer or react to that data. You know, if you think about, you know, the DAX, for example, granted, you know, it's a particular case, the German index, because a lot of the companies don't make profits in Germany. But in any case, if I were to tell you that Germany as a country had its entire economic model, you know, thrown out the window because of, you know, the Ukraine war, where, you know, they no longer had cheap access to cheap Russian energy, and really not being able to export those cheaply made goods to China, you think, well, you know, German stocks would be tanking because of that. But again, if you go and look at the DAX, they've, you know, yeah, things declined like everything else in until October 2022. But ever since, you know, they've had a great time. Um, so again, coming back to the original point, is it time to relocate to Europe? The way I look at Europe is more of a diversifier of, and that's it. It's a way of diversifying a portfolio and trying to uh, reduce any concentration risk. Okay, that's the way I think about things. I wouldn't chase the current move for the simple reason that if US stocks continue to suffer, if we continue to see this kind of risk off sentiment, it won't be a matter of which stocks are better. You could make the case for something like the Hang Seng, you know, Hong Kong. I generally speaking, I'm not a fan of Chinese stocks, but I could see a few, you know, at least in the near term, the Hang Seng continue to outperform even for the next few years. But in any case, when it comes down, between the S&P 500 and U.S. stocks and Europe, given the fact also that, you know, Trump has made it quite clear that he has beef with the EU, and really the main target for his tariff saber rattling has been Canada and Mexico. We really haven't touched much on when on Europe. So that is, the hammer is still yet to fall on Europe, and I wouldn't want to be in European stocks until you have that risk sorted out. Again, it could still just be a great buying opportunity. It really depends on where you personally think we are in the economic cycle. Are we still in a place where, you know, growth is holding up, or do you think we're potentially slowing down? If you've watched my previous videos, you'll know I personally think that we're in the slowing down phase. Again, not a recession, nothing, you know, depression wise, but just slowing down. And as a consequence of that, I see the chance for risk off. And if it's risk off for US stocks, that'll spread. And the only thing that'll work really in that kind of environment, and this is really, as I've said many times before, this is a developing story and it still needs to be confirmed. And I think that one big confirmation will come during the summertime, as I've said many times before. In that environment, the only things that work are bonds, cash, and if we don't have some serious, liquidity event, gold. But again, it won't really be a matter of which stocks to own. If US stocks suffer and suffer dearly, I wouldn't want to be in EU stocks. That's my basic, my base. Those are my expectations. That's what I'm trying to say. So to answer the original question, US or European stocks, for the short term, I wouldn't want to be in either, as I've said before. If I had to pick for the long term, I'd pick the US all day long, for the simple reason that Europe lacks productivity and the productivity growth of the US. Um, and as far as I'm concerned, it will always lack it. And again, if I had to choose between the risk of further decline in the S&P 500 or something that is doing well, in the short term, like European stocks, I'd still choose the US for the reasons I just said. So yeah, I'll keep it short. If you like this kind of content, consider leaving a like, and I'll see you next time. Bye.